Lost my mind, now I'm feeling so fine, cause I finally realized I don't need you. I'm feeling sublime, and you're watching me shine, and you realize it's time I don't need you.
Welcome to another episode of Resources in the Valley,
where you get your tools to make the most out of every day. Hey guys, so we're back for part two of our episode on tax questions. So, Brooke, how's your week been going? How did it start?
My week has been good. As I said last week, right in the thick of tax season, getting a new inquiry every day and just bearing it. That's really it. Trying to keep my eyes open. So, how's your week going, Imani?
You know, we talk a lot about pushing yourself, and I really did it because your girl was coaching soccer. I don't know how I ended up out there in the first place, but it was definitely a week of stretching, and as new and unnerving as it was really fun. So it was really cold out, but it was a good week overall. Absolutely. I'm lucky to have a great group, so I think that's a little blessing there. Alrighty. And so last podcast episode, we jumped into tax questions that Brooke has received from many different people that she's worked with. Probably about 100 of those questions are probably from me. So we thought we would just do an episode where we cover just a wide range of topics so that you can feel prepared during tax season. Last episode, we covered a brief call to action. It was Brooke's general tax advice for individuals and small business owners. Did you want to summarize what you think would be a good brief takeaway from last episode?
Last episode, we focused on organization. A lot of the questions came back to organization. And organization is something that you can do without having to do too much or pay too much. It's just discipline. Honestly, it's discipline. And if you have a business or you have a family and you have a lot of different things going on, whether it's investments, interest, etc., just organize your stuff and you'll be A-okay.
Excellent. So at the end of our last episode, we covered the difference between having you're going to have to fix my terminology, but almost like a personal tax preparer versus using some of the bigger tax franchises or even doing it yourself. And we talked about how there's not only that personal touch, but there's also accountability. You know the person that you're working with. And we also talked about how there's that emotional and mental and sometimes physical just support tax season and different endeavors that tie into taxes, like getting a home, trying to decide if you can make certain financial decisions. Those things can be sensitive topics that sometimes those bigger tax companies might not be able to necessarily assist with. So it's just really helpful to have someone that you can trust and build that long-standing relationship with to just have the best possible outcome. You know this person has your best possible interests at the forefront of their mind.
Organized. It doesn't, to me, I'm not going to say who for you to go to. I'm not going to say for you to go to somebody or, do it yourself. Whatever you decide, the number one thing is to be organized. If you don't know where you worked at last year, you are up the creek without a paddle. If you don't know that you sold stocks last year, you've only messed up yourself. If you don't know that you had debt forgiven last year, you're messing up yourself, and this is why I say, like, organize. Everything that's financial needs to go to your accountant or your tax preparer. And that's everything. You don't know what might come up and what might not come up. You don't know what might be a deduction and what might not be a deduction. It's and if you don't tell your preparer, they can't be aware.
I'm glad that you mentioned thinking about what did you actually do last year. For many of us, we're just glad to finish the year, and we're not thinking about those little pieces. There is one question I've been dying to ask, which is I have a lot of friends that have just been like, I don't know, watching the news, and we talked about how people watch one video on one thing and just pew off to the races. So I know a lot of people that just were like buying stocks, selling stocks, moving things over, just all over the place. And just quite frankly, it's probably not organized because it's one of those, online stock exchange type of things. So for people who did like jump into the whole crypto thing or whatever people have been jumping into these past couple of years, talking about, market's good, jump in. Everyone kind of just dove in. For people who are in a place now where they made those types of decisions last year, do you have any recommendations for how they can prepare and kind of keep track of maybe all the different trends that they jumped on and, find where those stocks were? How can they best be prepared for tax season and keeping track of what was gained or lost?
Well, if you own any stocks, dividends, stocks, crypto, whatever it may be, and you sold any stocks throughout the year, you will receive a 1099-B. If they gained interest, you will receive a 1099-INT. If you had dividends paid out to you, you will receive a 1099-DIV. And people are receiving these forms because, yes, the last couple of years has been a big trend on, people trying to do things correct the financial way, which is great. However, know where your stocks are held. Pay attention to your emails. Doesn't matter if it's with a big brokerage or a small brokerage. They issue those forms. The forms have everything that you need to know on it. However, you need to be aware that you have the form. And when you receive an email saying that you have a tax form, do not ignore it. That's the biggest thing. It's collecting your items and putting them together and knowing I have an account at Robinhood. I have an account at Cash App. I have an account at Snatch, whatever that one is called. But, like, you have all these accounts. I have an account at JP Morgan. I have an account with Fidelity. Know that you have all of these accounts, because if you have an account at all these places and you sold any amount of shares last year, you are receiving a 1099. This is reportable. Any amount over $10. And it's not. Is it substantial? No, it might not be substantial. However, to keep yourself clean and keep your hands clean, give all tax documents to your accountant, no matter what it is. High interest yield, 1099 INT. CDs, money market accounts, 1099 INT, gained interest. Like, this is all these are things that you're going to receive. Miscellaneous work, 1099 miss, 1099 NEC. You're going to receive these things, and even if you think that $100 wasn't substantial, report it. You don't want to get a letter from the IRS in a year saying that you did not report $100. And now the $100 is $100 plus interest and late fees and whatever else. So, it's just not It's not worth it. So organization is key when it comes to tax season. Paying attention to your email, to your mail is key. If it's a tax document, even if you don't know what it is, put it in a special place, all together, all in one folder, so then that way when you see your accountant or your tax preparer, you are prepared.
I love that you mentioned that because I don't know if you get this, but I feel like culturally people just feel that they get robbed at work already tax-wise, and then we get robbed when purchasing things sales tax-wise, and then we just view the IRS as this big money-snatching giant. So I do think that for some people they may want to do stock market exchanges and feel as though, well, this is mine. Like I did this, I already give so much, so I just want this to be mine. So I hope that everyone who's listening really takes her admonishment seriously, to just report it and let the cards fall where they may, because as she mentioned on the last episode, those companies are reporting it, and they're just kind of in a courtesy way letting you know, hey, this is what we reported. So if you think you're getting away with it, if you're not keeping track of it, they are. Alrighty. So as I'm driving, especially during tax season, I often see these signs posted all over the place saying, call me. I'm going to get you at least a $10,000 tax return, or else I'll pay you $500, which in my mind, the math's not mathing. However, my question is, can tax preparers, and these tend to be like individual people making these promises, can they guarantee a certain amount for tax returns?
No, they cannot. Taxes are a formula. Taxes are a system. Taxes are based on several different things. Well, number one, it's probably not true. Number two, they're probably doing something illegal. And number three, see if they signed your tax return. I can't tell you how often people bring me tax returns and they're like, I paid this preparer. And when I ask them for the copy of their last year's tax return, it says self-prepared. That means you didn't pay nobody. But you did pay somebody, but they didn't take the responsibility of saying that they prepared your tax returns. If you are paying a tax preparer, they should be a paid tax preparer, and they should be enrolled with the IRS, and they should be able to sign your return and accept responsibility for doing your return. And if that's not happening, then you kind of want to know why.
Wow, I never knew that. I mean, I never called them because I already had Blame the Car's number, but it's one of those things where just those big numbers, especially for people who don't normally get a tax return or get maybe a smaller one, it's so tempting, but that's good to know. Okay, so when would be considered a busy season for taxes for tax preparers? So, for example, if someone's looking to become a tax preparer and they want to take on business accounts and personal accounts, as far as tax season goes, when would be busy for each types of those accounts? When's a busy season for business accounts, and when's a busy season for like personal taxes?
Well, the general busy season is from the beginning of the year to April 15th. For business accounts, and when I say true business, I'm not diminishing the fact that you have a sole proprietor LLC. It's not what I'm saying. Sole proprietor LLC is reported on a personal return because it's only one person LLC, single member LLC. Unless they elected to file as an S corp, and most people don't know about that election. So when I talk about real business, I talk about people that have to file 1120S's, 1065, partnership agreements, things of that nature. All of their returns are due March 15th. So businesses are a little bit more busy from tax season from the beginning of the year to March 15th because you have to, first of all, at the end of the year, December 31st, January 1st, you have to tie up all the books. You have to finish up all your books and finalize the books so then that way you can create financial statements. Financial statements report what was on, financial statements list the information that's going to be reported on the tax return. Okay? Before even a tax return, 1099s have to be issued. 1099s must be issued to the employee or contractor prior to by January 31st, and they must be submitted to the IRS as well. So, and then that's also W-2s as well. So 1099s, W-2s. And then after that, you have until March 15th to do the business taxes. Personal taxes, you have until April 15th. However, I do taxes all year. I do taxes all year because of extensions. I do taxes all year because of people that might not do their taxes for a couple years, for all different kinds of reasons. It just depends on what is going on in your unique situation. The other thing I will say about a preparer, having a personal preparer, or when people say that they can get you tens of thousands of dollars is, a tax preparer can maximize your deductions, and that's what your tax preparer should do for you. They should maximize your deductions. They should know your situation. They should know everything going on in your situation, so then they have the ability, or they can maximize your deductions. So you're not looking for your tax preparer to make you these tens of thousands of dollars. What you're looking for your tax preparer to do is maximize the deductions that you have the ability to take. Because a lot of times we don't know all of the deductions that we qualify for.
Thank you so much for sharing that. That's really helpful. I think it's also really good because in the past couple of years, a lot of people have started businesses. So I think it's kind of easy to do what you've always done, which is file by April, and kind of surprised to find that you got to do things in a different way. So thank you for that. I do want to just briefly touch on our phenomenal woman of the week. We have Miss Dasha Kennedy. If you listened to the last episode, we fangirled about her over and over again. I'm going to do the same today. I just believe that she is such a great counterpart to what we're doing, or complement to what we're doing today. She's a financial activist that has helped over 70,000 African American women kickstart their finance journey. And she always provides financial advice that's culturally relevant. She started the Brooke Black Girl in 2017 because as she looked for finance advice, she was basically finding what we normally find, which is people have extra money they're looking to invest, or maybe people have a certain type of household, or a certain amount of income, or a certain job or field, or they come from a certain family. So there's all these sorts of broad reasons as to why people invest, and she felt like she couldn't find anyone who looked like her or had her situation. So we love when people create things that they need because we realize needs tend to be universal. One of my favorite things, one of my most favorite recent posts is her financial self-care is love post. That totally ties into tax season. Keeping track of your things is financial self-care. Keeping track of your receipts is helping future you come March or April to not be wishing you'd done so all last year. And on her post, she wrote, buy yourself some roses, invest in a new pair of pajamas, find a budgeting method that works for you. I've been working on that. So we really applaud her. Brooke, did you have anything you want to share that is maybe financial self-care for when you have taxes due?
Well, my financial self-care tip would be preparation. Another thing that's been common that I've saw over the years are people wanting to limit how much they pay in taxes out of their check to kind of break even at the end of the year. Now, if you break even, that's great. You have done it. You've hit it right on the nail. And that's great. That's the goal. We don't want to owe. However, you do have to keep in mind that when you do owe, there are late penalties, there are late fees, there is interest. So if you put yourself in a position of owing, where you know that you're playing this game of I want to pay the least amount of taxes out of my check, prepare. Prepare yourself by having funds at the end of the year that you're going to be able to pay your taxes with. Prepare yourself by putting the extra $20 up a week or $30 up a week to make sure that you have money to pay your taxes with at the end of the year. A lot of times I can tell people right away if they're going to owe or not. And there is no rule of thumb. There is no magic number in the sky. It's just a series. Taxes are a series of calculations. However, if you know that you made decent money and you didn't pay more than $1,000 worth of taxes, like it's almost like rocket. You know what I mean? Like at that point, it's almost like common sense. Like you're gonna owe. You know what I mean? So I mean, just my personal decision is I'd rather be safe than sorry. So take the extra $20 out a week. You know what I mean? I'd rather them take the money and give it back to me than me have to worry about, oh, now I have another bill to pay that I have to pay. And honestly, it's in my best interest to pay it immediately and not set up a payment plan. I know people that have payment plans with the IRS for years. And once you get that off your back, it's such a relief. So, avoid setting up the extra bill if you don't have to.
Okay, so you touched on how people want to try to just finesse the IRS and get certain results if they can. What is your advice for anyone who says, you know what, if the cutoff date is April 15th, I'm going to do April 15th or 16th or 17th? Are there any pros and cons to extensions that you can share with us?
Extension is a avenue for you to take if you're not ready to file your taxes. So if you're not ready to file your taxes by April 15th, and that means submit, not talk to your tax preparer for the first time, then file an extension. And honestly, it doesn't take till April 15th for you to know that you're not going to be ready to file an extension. So once you realize that you're not going to be ready, go ahead and file the extension. Extensions open up in like March, sometimes February. You know what I mean? So just go ahead and file the extensions. I mean, like, Give yourself that extra time. Before, I know I touched on this last episode, extensions do not stop penalties and late fees. Extension is only an extended amount of time for you to complete your filing. But late fees will still be assessed. Penalties will actually, I think late fees are the only item that's not assessed. But penalties, interest is still assessed. So don't don't wait. Don't hesitate. If you're not going to be ready though, and you know that you're not going to be ready, go ahead and file an extension, especially if you're on that line of you may possibly owe. Because 9 times out of 10, you're not filing an extension if you don't owe money.
Excellent. Thank you. All right, so do you have any advice for anyone who might be looking to start their own tax business? I know that's another popular thing that started happening. Everybody's cousin became a tax preparer overnight. But some people really do feel passionate about taxes. What advice do you have for anyone who wants to get started?
Well, first of all, just like any other business, get a mentor. Get a mentor. Learn the business. Do you have to have a degree to do taxes? No, not necessarily. There are things that you might learn in school that might assist you, but no, not necessarily. Not only get a mentor, but go ahead and take the proper classes and things of that nature that the IRS offer, and get registered with them. Get registered. Take their classes. They offer classes. They offer classes on new tax law. They offer classes on changing tax law. They offer classes on security. They have classes on a lot of different things that have to do with taxes, and it's only going to help you. So if you want to start your tax practice, why not? But get the knowledge. Get the knowledge. Make sure you know the knowledge. And also make sure you know where the information is coming from. You need to know where to look it up. You need to know to go on irs.gov and look up the actual law. So then that way you can know what is legal and what's not legal.
Alrighty, so speaking of starting your own tax business, I know many people who are in like a service business field, and one big struggle sometimes can be getting paid on time or getting paid your worth, or like after someone pays a deposit, for example, getting the rest of it, and it's like a crazy chase sometimes. So what are things that people can put into place when they become a CPA, when they become is it personal, what is the phrase, personal tax preparer? Is that right? So if someone's looking to become one, how can they make sure that they get paid on time and what they're worth? Because as I understand it, taxes are not like a cut and dry thing that you're just done in 30 minutes. So how do you make sure that you're getting the best bang for your buck as the preparer?
Well, just like with any other business, streamline the process. Create yourself a process, whether it is deposits or it's people paying ahead of time, or a lot of the tax programs offer products where you can take the money out of the tax return. You just have to charge your clients a little bit more. But whatever it is that works for you, streamline the process. And that's just with any company. You just have to come up with rules and regulations and stick to them.
So if someone has taxes that take longer than maybe like your average time span, let's say if the average time span is, I don't know, 2 days or so, and someone has something that takes much longer, whether that's because they weren't organized, they're trying to go get something, or whether it's just a more tedious process with more detail. Do you think that that should influence people's like fee scales, or I guess is that just up to the preparer to decide?
Most tax preparers charge per form. Per form, and they have a dollar amount on certain forms based on the complexity of the form. Some preparers will charge you based on time. So it's really, like I said, it's up to the preparer and what they decide to charge. If they're charging on time, per hour, or whatever, or if they're charging per form based on the complexity of the form. Most preparers do charge based on the complexity of the form and what forms need to be filled out.
Thank you so much for giving us insight into what goes on after the submit button is pressed, because whether we're doing an individual a tax situation where we're filing on our own online or working with other people, I think it's just this world that unless you're in it, you don't have a clue what goes on on the other side of it. So I'm really grateful for that. Thank you so much. So did you want to leave us with anything we haven't covered just yet? Is there anything that we should walk away knowing? I'm walking away grateful because I need to watch these episodes and take notes. But is there anything that you would like to leave us with? Thank you so much for
saying that taxes are just like a lot of other things in your life. It's what you put into them. When we don't put work into things, we don't get a large return out of things. So whether it's taking your time and organizing and making sure that everything is accounted for, or taking your time and making sure all your documents are together, or taking your time and making sure that you made the right choices, or taking your time and making sure that you got all your deductions. It's just like with anything else. When we go about things quickly, we usually get a microwave product. And with taxes, you really don't want a microwave product, because that microwave product can end up having to be changed or having to be amended in the future. And if you take your time and do it right the first time, then 9 times out of 10 you stay out of the way, you stay out of trouble.
That's a word right there. Take your time, do it right the first time. So I'm definitely going to be trying to apply that. All right. Well, I have loved this episode. Thank you again for letting me pick your brain nonstop. This format's a little intense, but I think that you did it very graciously and gracefully. Thank you again. All right. And everybody, with that, we're wishing all of you beautiful angels a blessed and productive week.
And remember, you all will get through this valley too.
Guidance given during this program are only reflections of our personal experience and is not a substitute for professional advice. Change is your choice.
Stay faithful, not hateful. I'm playful, cause he got me. He called me his angel. I'm flying to heaven. Just know that he sent me from heaven to flex you.